And it's funny, so it doesn't tell me if it's recording. It's just like pause recording, stop recording. So I guess it's recording. Wouldn't it be nice if it went 3, 2, 1, or had a timer or a light came on or something? But I guess it's recording. I'm so afraid that we're going to start and then nothing happens. All right, a couple of people are having trouble getting in. But anyways, we'll work on it. So anyways, welcome. It is Friday, approximately 11 a.m. New York time. Hopefully, maybe next week we'll switch over to a Thursday and get this in a little bit earlier. And as you can see, in many cases, doing it on a Thursday is important. And also remind yourself that this is something that we're practicing, right? That you're planning Monday's trade on Thursday. Have you actually written it down and sort of manifested your destiny here, where you write it down, you put it on a wall, and like you're planning trades for next week, but you're actually doing this on a Thursday now. Friday might, in some cases, is too late. So we might find that some of these trades set up yesterday. So maybe that's why we need to move on Thursday. But then in some cases, Thursdays are going to be too early. So, it's a sort of one or the other. But nonetheless, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So let's start with this. I'd like you to declare whether you're bullish on these yen pairs, and by you bullish on yen pairs, I mean you think all these yen pairs are going to go up, or let me know right now if you think all these yen pairs are going to go down. I am not tracking this. This is not a survey. We don't need statistics. You need to declare your bias. Because if you can't do that, you've already lost all your money. Okay? And I could take it one step further and I'll say, give me one reason why. And the reason I would ask that is to make sure that you're not saying, well, because Wayne told me so, or that's what Wayne was thinking. Because that is horrible. That's the worst answer. I'd rather you say I don't know than that's what Wayne told me. So, with all that said, you have a plan, you have a bias. You are saying these are going up or they're going down. So, if you're saying they're going down, generally speaking, you're saying yen strength, and that typically occurs when there's a risk-off scenario globally for investing. A deleveraging is what it's called, because you use yen to leverage up. So if you're getting out of those leverage positions, you're deleveraging, okay, and going back to cash, so to speak. So deleveraging is bad, leveraging is good. Deleveraging means you want out of risky assets and you're lowering your risk, or if you're getting into riskier assets because you feel the future is going to be fantastic, well, then you leverage up, right? So if you think down, that's bad, macro-wise. Not necessarily bad for the currency, but just that form of leverage. Or if it's going up, you're thinking good things are going to happen in the future. So that's what it just really comes down to, your bias. And how you get to your bias, you'll be flipping a coin, long-term technicals, fundamental analysis, it doesn't matter. The alignment of the stars, the migration pattern of elephants, I don't care. Because it's going to be one or the other usually. But what we're defining is whether you're buying at support or whether you're selling at resistance. So if you're bears, you're selling at resistance. And that makes our job easy. Where's resistance? Where's the closest level of resistance as a bear? And where's the next level of resistance? If you're a bull, where's the closest level of support? Where's the next level of support? Everything else is just noise and probably nothing good. Okay? Cool. So with that in mind, where do you want to start? How about far left? All right, we'll go left to right in this case. All right, so you know if you're a bull or a bear on this, right? So check it out. Go to, I don't know, 15-minute charts, enough. Okay, what do we want to see happen next week? Well, let's clear this up. So let's start with bulls. Okay, what does a bull want to see? I'm trying to move this other way. What does a bull want to see? Well, right, next week we want to see this, or you want to see this. Understand that? Now you can see why that makes my trade vulnerable, right? So the only thing that can save me is an out of position trade, and that would look more like this. Okay, that's not a lot to hope for, but I just bought a triple bottom. I bought support. I took a shot in a situation where I felt like I was risking very little, and then in a very short amount of time, I was able to move my stop to break even. So I understand it's a vulnerable trade, but I got free opportunity. Okay. Opportune. I don't have to spell this. Opportunity, do I? Anyways, it's sort of like, today in today's webinar, we talked about income from like rental property. It's like, how would you like this apartment building for free? You're like, yeah, sure. Right? Sure. Okay. And you just collect the rent. Okay, that sounds all right. So it's kind of like that. Like in this case, I know it's vulnerable. I know it's not the world's greatest trade. I'm not trying to get the world's greatest. I'm not trying to get the world's greatest trade. I'm trying to get opportunities that cost me very little or nothing. Okay, so in this case, I can't lose. Great. So it does this and I'm going to get paid, or it does this and I'll have to re-enter, or it does this and re-enter, but it's all the same thing. Okay, did I know that when I bought the trade on Monday? No, no, but I knew it was above here, and that's pretty good. Okay, now if I really want to be a cheeky monkey, I say, well, I'm already in the trade, so why lose and get back in? Why not just do this? You see what I mean? And say, I'm already in, and why risk going in? I can, by moving my stop back down, it's kind of like a new trade. It says I'm in here, and I'm in here. Okay? So it's the same as, right? That kind of stuff. That only looks crazy if you're really worried about a win-risk ratio. Okay? You know what I mean? But anyway, so I'm going to move this. I very rarely move to adjust, but we'll leave it there. So quite a few guys are logged in more than once. What's up with that? Keen's logged in twice. Ron's logged in twice. What's the deal, yo? Yeah, it's interesting. Some people have told me that for some reason Zoom doesn't give them audio on their Apple or on their Android or on their phone or something. Yeah, no, that's cool, guys. Just wondered what it was. All right, cool. Yeah, so so that's not us, guys. That's Zoom. So yeah. And now your screen is blinking again. You're kidding me. We moved to Zoom to avoid these things, but anyways. Well, did that help? You know what? Let me just do this. I'm going to kill, I guess this is my camera. I'm going to kill my camera. Mute my audio. No. Stop video. Okay. But you can still see the charts? Okay, so we'll see. I don't know what it is. So we'll see. We'll see if this works. All right, so that's that. That's the logic. And then, of course, the other way is bullish, but what other issue does this give us? And it's funny, now I can't find it. Where'd my drawing tool go? Gee whiz. Maybe there's a weird incompatibility with the drawing tool. Hang on, I have to bring it up. I have to click it like 3 or 4 different ways to get rid of it, and all of a sudden it was gone. So anyways, so it wasn't by mistake. So let's put it there. All right, so here we are now. Let's go the other way. If you're a bear, knowing how to swing trade, you're looking at this, okay? Now, the problem with being a bear here is the monthly trade is here and even higher than that, and the weekly trade is here. So they're not really helpful. There's no confluence, okay? Doesn't mean it won't fall. It just means if the monthly trade started here. Do you guys remember? I actually brought it up way back here, okay? I said traders, including me, are looking at trades for September. We started talking about September trades August 15th. If you guys remember that, right? So I'm like 2 to 3 weeks early. I'm planning those trades. And, you know, in this scenario, that might be what happened. We don't know yet, but let's just say, you know, this trade here was the monthly trade, okay? And on Thursday, as a bear now, that was your weekly trade. And that's why I'm thinking about moving this to Thursdays. Okay. Yeah, I turned my webcam off. I don't think that's necessary though, Max. I think you're good. I'm trying to make sure this broadcasts well. But you guys, can you guys see the value that if you're a swing trader and you're looking at what's happening next week and next month, that a lot of these things set up early. Oh, is it blinking again? Gee whiz. I have nothing running now. All right, let me try. How do I do this? New share? I don't know what new share is. Share. Did it, was that better? Did that do anything? Did it turn it off and turn it back on? Still blinking. Did it even turn off? Let's try this. See if I can optimize it. So can you see it now or is it off? On but blinking. Okay. How about this? Okay, that killed it, right? Let's try this again. And it's way over here now. Interesting. Oh, even the chat has changed. All right. So it wants to do that. Okay. So now I want to share portion of screen. And it's funny, and all of Zoom wants to change. And now I got to open the chat again. What a weird system. Okay. How about that? No blinky now. And no blinky. Very nice. No blinky blinky. Hey, we'll get by. And look, if you need to see my pretty face, maybe you can see that. But anyways, all right. So no blinky blinky. Okay, let's move on. So here, let's. Oh, my drawing tool's gone. Wonder if it's my drawing tool doesn't play nice with Zoom. Why would that be the case? Okay, where's my drawing tool? There it is. I hope it's not the drawing tool. Okay, anyways, so a couple of things to wrap up what I just said. We're in the middle here, so this isn't actually a good trade for anybody. I might have made a good trade on Monday. Okay. We don't know. But also on Monday, bears had a good trade to sell. And last Wednesday may have been a good day to sell. So what are we talking about? This is all about the future. On Thursday, you had a weekly M3, next week's M3. So all of this is like, what happens now, again, is sort of like a little too late, a little bit irrelevant. Okay. And we need to be thinking ahead. So logging in today going, okay, let's plan out tomorrow. It's already too late in many cases. This might have been the best price for bears. This might have been the best price for bears. This might have been the best price for bulls. This is the next best price for bulls. I got one of them only because I was super conservative, because this is my coaching account. But like today, we're in the middle of the range. Okay. If it was a little lower, which we had earlier in the week, or if it was a little higher, which we had earlier in the week, we had smaller time frame trades, right? Because we're basing everything like there's next week's central pivot, there's next week's M3, but some people may have been on this trade a week ago. Okay. And that we do, and again, we don't know which one is going to be it. I'm hoping for this, of course, and if you're a bear, I think you're even more likely to make money. I think I'm not going to be successful here, but hey, it's free. It's a free opportunity, and you get enough free opportunities, you succeed, right? So take a look at this one. Oh, and I guess I should point this out too. I clarified in the past that I'm moderately bullish on Aussie, and I'm very bearish on Euro. I'm quite bearish on Kiwi, but I'm modestly bullish on CAD. You see how it's not just all yen pairs? So let me say it differently. If I was a bear, I would sell the heck out of this. I would sell the heck out of this. If I was a bull, I'd buy the heck out of that, and I'd buy the heck out of that, depending on the market conditions. You understand? They're not equal. The only thing that's congruent here is there's yen. So if you're a bear, if you answered you thought all these pairs were going down, first of all, you're a little bit wrong. It's a loaded question. They're not all going to come down equally. So you got to figure out which ones are going to fall moderately and which ones are going to fall aggressively. And to me, Euro is definitely one of those. Pound is definitely one of those. If I was buying yen, I'd be crushing Euro. Okay? So look what's happening. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, sell. See the wedge? Breakout, pull back, right? So on and so forth. What's the news to use here as swing traders? Do you think this is random? Do you think this is random? Mm-mm. Mm-mm. And we know, right? Again, when did I start telling you guys to think 2 and 3 weeks in advance? In here. Okay? In there. So if you're a bear, and in particular, you're not this, I mean, if you're selling this pair, you're actually bullish yen. And that's a big part of the risk on, risk off. Totally awesome. That's exactly what you need. But on top of that, you need to be a bear on Euro and definitely have reasons why, right? Where's a great place to sell? Well, we know that, right? What about on a weekly basis? Where do we sell on a weekly basis? M3. That's nice, right? So if you're a bear, that's what you should be thinking. You should be thinking things like always, right? Up, 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 up. Oh, so I did that wrong. As a bear, What are you thinking? Up, up, right? Up, down, 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 down. So we got the down, 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 down. Up, up, sell. Okay. If you missed the first one yesterday, really, then your next trade plan is very straightforward. Lower low, lower high, lower low. Now, we don't know the price. So a proper swing would be selling off 1750, right? Doesn't mean you'll get it. Oops. Doesn't mean you get it. That's just proper. What might happen is because the trade, you had two opportunities this week to sell it at the M3. You're a swing trader. You're a bear. You sell at M3, right? There's no negotiation on that, right? Cool. And the funny thing actually about this one and a few other pairs, this is the Friday front run we did a week ago. You hit your target in one day. And if you remember the swing trading course, it tells you there's likely to be a counter trend trade, which is not a little pullback, like 100% pullback, right? All the way back to the central pivot and maybe beyond. Boom, look, it happened just straight out of the textbook. Cool. So now what? Well, we're asking for this. It might happen. It could happen. Like, that totally fits, right? But what if it doesn't? Then what is it likely to do? It probably make a lower low, come back, roll reversal, and do this. That's your plan B. Okay? Yeah, in that case, you could use a 4-hour 21 for sure. But remember, so yeah, that would be an out of position trade. For example, yeah, that would be right. Well played, sir, well played. Okay? How about my bulls? Hey, bulls, would you consider something like this? Well, we're going to need some better news for Europe. You know, the UK running its economy into the ground and doing a hard Brexit is not good for Europe either. I mean, it's just really hard to buy the European story. But I think what we might hear, if you don't mind me guessing, the ECB comes out and changes its mind and says no more cutting interest rates, no more quantitative easing. And that would define the bottom of the euro. Adam says they certainly could do that. I don't know what the odds of that are. Okay, but I don't know. I think there's a lot of debate going on in the Fed, and I think there's a lot of debate going on in the ECB. Right? I hope Christine Lagarde takes over the ECB. I think that'd be excellent. But anyways, that could happen too if you're a bull, right? Now, I'm not a bull on euro. I'd like to be a bear on yen. So that's not a perfect trade. But yeah, something like this would be fantastic if you were a bull. Now, this would only happen, I think, if the yen weakened across the board. And so I would need Aussie to go up. I'd need CAD to go up. I'd even need Kiwi to go up, for crying out loud. And euro would go up, and pound would go up, and something else would go up. Dollar yen would go up. We need everything to go up. Okay? So what that tells me is if euro dollar or euro yen is going up off of that double bottom, that might be well and dandy, but you're probably missing a better trade unless euro skyrockets on a change of plan. Right? So we would need the ECB to say something. Okay? Seems to me you should have just been selling this. And one thing to point out, I'm on a daily chart now. How many people here get like sidetracked during periods that look like this. For one whole week, this goes up. And you hear in the news, everything's changed. And then 2 weeks, 3 weeks later, and it's on the news again. Everything's changed. All the bad is over. Okay? 2 weeks straight up. People start talking about buying again, right? Have you ever kind of challenged yourself to look at the market at a higher time frame and say, yeah, it's been up for a week or even a month and a half, but nothing's changed? Right? You ever do that? Make sure you're on the clue train. Oops. This has been going down for years. So I'm really reluctant to buy this. That's all I'm saying. Okay. So if I was going to buy a yen, it may not be that one. All right, let's take a look at Kiwi. Now they're in a situation where they're cutting interest rates. They're likely to cut interest rates more. So this is, again, not really a good one. Okay. Yeah, Adam says, I felt that over the years that normally, in normal situations, the trend will continue eventually. There's one caveat to that. Maybe everyone writes this down. Unless the central bank changes its policy. Okay? The euro has lost value since they started cutting interest rates. That's all that matters. That's it. That's been the policy. Weaken the euro. Why are they weakening the euro? What's the most important thing that Europe lacks right now? Is it a stable economy? Europe's never had a stable economy, right? The Dutch bail out the Germans bail out the Greeks are jealous of the Spanish hate the French don't even think about the Spanish. And this is going forever, right? And what about jobs? Europeans are used to 9, 10, 12% unemployment. So they don't really care about that. The one thing they're worried about is inflation. And they don't have any inflation. They have stagflation, they have deflation, they have disinflation, but they don't have inflation. So they cut the value of the euro by lowering interest rates. And by doing so, they're weakening the currency and trying to create inflation because you need more euros you used to buy a Rolex, because you have to pay Swiss francs for a Rolex. So you need more and more and more and more euros to buy that Rolex. You used to buy a Rolex for 21,000 euros, and now you need 34,000 euros to buy the same watch. That's inflation. So until that changes, sell the euro. What if it has a great week? Don't sell the euro, right? But that's the whole idea, Adam, right? What does the central bank tell you? And then go along for that. And that will generally win. That strategy will generally win. How long has New Zealand been cutting interest rates? Since July? Even longer, right? But look at this, look, from July 1st, if all you did was sell the Kiwi yen, you would have made money, not every day, but nearly every day. And that will continue until the central bank says no more cutting of interest rates. The economic data is not as bad as it used to be. There's no reason to be accommodative. The trade war between the United States and China has been resolved, and there should be an increased demand for Chinese goods from Americans, and therefore the factories are going to start booming and building new things, and therefore China's going to need commodities, and they're going to look to Australia and New Zealand and other markets, and generally speaking, demand will go up. So when they say things like that, the first thing to happen was probably a big spike, then a retracement, and then sideways until the data starts saying to the Central Bank of New Zealand, the Reserve Bank of, of New Zealand, that they should probably start seeing some inflation soon. And that's what this starts to look like. And your currency starts to appreciate. And then they'll start to have to cool it off, and they'll start to raise interest rates. But in that case, in New Zealand, that will attract money, that will push up the value of the Kiwi and all that kind of stuff. So really, just do what the central bankers are telling you. Okay? Okay? The Fed cuts interest rates, that tells you dollar should weaken, but the reserve currency is different. In that case, the dollar strengthens. Okay? Does the carry trade define macro? No, it's the other way around. Macro creates the carry trade. My monitor isn't turning off. There we go. So anyways, yeah. So I look at this, and do you really want to be a bull on this? Really? Like, that's what you're looking at? You're like, yeah, I want to buy that. It can't fall any farther. Please don't think that way. Okay? But if you see every other yen pair start going up, eventually this will go up too. Because the yen would be going up against or in this case, yen would be weakening against everyone when macroeconomic conditions have changed, which would influence central bankers to change their policy, which may turn this around. The only thing to turn this around would be macro. And to get macro to work for you, the central bank determines, listen to me, listen, the central bank determines the value of the currency. New Zealand, it has a policy of weakening the New Zealand dollar. So you shouldn't be buying it. You're trading against the Reserve Bank of New Zealand, and no, you are not George Soros. George Soros had $28 billion in his bank account and leveraged it 400 to 1. You don't. Okay? So anyways, that's what I caution you with. But what are we looking at? Wouldn't it be neat, or wouldn't it be technically important if we did bounce at that price? I'd say yes, it would be technically important because it's a monthly M2, which is bullish, but it's the beginning of the rest of the year. It's exactly when we want to be long, if it turns long. We don't know if it's going to turn long. But what was the hypothesis? What was the analysis? The analysis said, based on seasonality, very often, many years, not every year, but many years, these pairs turn. When? Right here. And what could happen? Doesn't have to, doesn't always happen, but what can happen? Right here. Traders come back to the market and they decide things are not as bad as they thought over the summer, and they start buying. But a trend trader would sell this, okay? But is this a good place to sell? No. We know that from the swing trading course. But if all you're looking at is weekly trades, you're not looking at monthlies, let's just say this is so bearish that monthlies just can't even keep up. They're too slow. Fine. Cool. Then zoom in, right? And plan it. What do we see when we zoom in? You should have shorted it yesterday. If you can't see it on Thursday, you won't be in it on Monday, right? You see that? So now maybe you get this on Monday. A Thursday trader sold it at this price at 67.50, and a Monday trader is going to get it at 67. Because you took the trade on the Thursday, you get paid an extra 50 pips. Right? Now the cool thing is you used to work really hard to make 50 pips. Remember those days? Yeah. Now it's just because you had a better trade plan. Imagine this. You sold this on Thursday. Okay. Okay. You're a bear by definition. Is it really that difficult? You've analyzed this market and you've decided based on your analysis you're a bear. Is that reasonable? Or, right? Is anyone willing to admit that maybe they overcomplicated things? Like, could you just wake up in the morning and sell this? Well, not every morning, but most mornings, right? How much money do you think you would have made if you just said, I'm a bear, and if this gets to resistance, I'm selling it? These are 1 hour charts, guys, right? And yeah, my drawing tool is gone? No, it's over here now. What if that's what you said? I'm a bear on this, so every morning I'm going to wake up and I'm going to look for reasons to sell. Does anybody do that now? Maybe not this pair, but some other pair. You wake up in the morning, you know what you want to do, you just don't know if you're going to get the opportunity. I want to sell British pound. Will I get to sell British pound today? I don't know. Let's use some technicals. But I'm trying to get you there, guys. That's where I'm trying to get you. Okay? Euro dollar, okay. That may not be the right one, but it's definitely the biggest one. But I'm trying to get you guys there. That's the whole purpose of swing trading, really. One of my goals is that I force you somehow to have a bias. I mean, we talk about it every day, right? So if you were front running, you can see that this was the sell zone, right? And what happened? It just fell like a ton of bricks that week, just ridiculous. Right? 1 week's trades. How many scalps do you think that is? And of course, if you're a scalper, you might be buying it and selling it, buying it, selling it. But you know that doesn't work, right? Adam says some pairs it's clear. Yeah, but isn't that what your technical analysis is supposed to tell you? These market conditions are favorable, these ones are not favorable. Hey, and then you make a decision, right? So you sold here. Great. And you sold here. Great. And you sold here. Great. Where are we going wrong? Right? How many hundreds of pips is this? 72.5 to 60. That's 750 pips, guys. And then this one, you sold at 69 and it dropped down to, okay, that's only 100 pips. And then you sold it again at 69. This time it went to 66.5, right? And then you sold again at 68. But again, now down to 67. So, 100 pips here, 250 pips here, 100 pips here, 750 pips here. And what'd you do? You woke up in the morning and you're like, I wonder what I want to do today. Okay. And so what are you thinking about now? Let's bring this into now. So you've done all of that. What did you do this week? Well, before this week, let's talk last week. What did you do last week on Thursday or Friday? Looking to sell. Okay, cool. Then you hit it and you expect a counter trend trade. Then you're back at M3 again, so you do it again. Double whammy week, right on. You mean that 1 week we point out that you should be swing trading, you got 2 profitable swing trades? Nice, right? But remember, you're not guessing, you're not changing your mind and changing your, so what are you doing now for next week? Well, here's Thursday. And you already know what you want to do. You want to sell this. You know that. You know that. It's the only thing you do. Every week, every month, every day, is this at the right price? There's the price. And you know it, it's definitional. Cool. So you sold here. Boom, another week done. That's where I want to get you. What did you do this week? Oh, I sold Kiwi Yen again. What price? M3 again. Okay. Now the next part, if you get this right, because we don't know if you get this right, but if you're going to get paid on this, it's also going to do that most likely, right? So you got a Thursday trade, a Monday trade, and I know you can do this, right? Everybody's that agree, say aye. Aye! I know you can do this. Aye! I know you can do this. 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 I feel it in my bones, like I'm practically shaking. I'm not an emotional guy. Like, I want you to do this so much. My hands are shaking and I'm not emotional. I know you can do this. I know you can do this. This is you. This is your destiny. Right? This is it. You make your future. Right? You make your future. I know you can do this. And of course, what if it starts doing this, guys? Do you start selling up here? No, not really. But you wait for this to roll back over and then you start selling it again. Okay? Okay? And if you get it wrong, not a lot happens. You remember, I actually bought this trade. You remember it? And we talked about it. I said, yeah, it's risky. But the news came out. I saw that. And I said, but you don't buy up here. That's where people go into bankruptcy, right? That's where bankruptcy goes. So do you remember I bought it somewhere around here? And then after a day or so, I moved my stop to break even. I'm like, yeah, I don't think it's going to go up, but it might go up. It happened right on my pivot, and then I got a higher high, so I bought a higher low, right? So even if you're doing things, let's say wrong, whatever that means, your bias is wrong. What you do isn't wrong, but your bias is wrong. How does that end up? So you bought it here and only made 100 pips, right? You bought it here and only made 50 pips, right? And you're like, this ain't working out. You know, when is this market going to turn? Well, maybe in September. So September, you have a trade plan like, well, you might want to buy here, but this is more preferable. So if you get a shot and the market agrees with you, gives you a little bounce here and steps up, you'll probably buy it here and put your stop here. And once again, you might only make 50 to 100 pips if you're wrong. Okay. Hey, Joey. You're good, bro. There's a video. Okay. Are you always buying or selling at the nearest pivot? No, that's why we have plan A and plan B. Okay. So for example, I want to see a reversal pattern down here. Okay. Or something like this. Okay. So it's not necessarily the closest one, but you identify what's most likely. So look at this, guys. Monthly M2, weekly M2, double bottom. So if I was a bull, wouldn't this be sweet? Remember, you don't just throw down trades because blindly. You see the 5A cross? I mean, think about that. I wrote my book 12 years ago. I started coaching people 14, 15 years ago. And what was the basis of strategic and tactical Forex trading? The SMART plan. You guys remember all of that? When you get your price, whatever your price is, I did a lot on dynamic levels of resistance, right? Right, like all of this in here. But it just comes down to your price, whether it's dynamic, whether it's a pivot, whether it's a psych level, it's your price. If you're selling resistance, you listening to me? If you're a bear, your job is to sell at resistance. So where is resistance? That is the most important thing. If you're a bear and the market is bearish, your job is to sell at resistance. What price is resistance? So you would have sold this on the Friday and made the swing, took your profit because you're supposed to take profit always at R2, or sorry, S2. And then you have another chance. Here you are at 68 M3. So do you sell? Should you be short 67.90? No, that's the price. So then when you get near the price, guys, you have, in this case, you have 24 hours to get ready for this. But when you approach this level, let me just draw it. Here's your new chance to short again. Okay, cool. So now you zoom in a little bit, and then you, I guess I have to turn all that off. Okay. No, I have to turn the other one off too, I think. Okay. Where do you sell here? This one? No. This one? No. This one? No. This one? No. This one? Yeah, probably. This one, for sure, you're short. Okay. 5A cross down, done. Okay. So you should be short. I'm sure now the drawing tool's in the way. You should be short right here, not here. Okay. You see it? And you're like, well, Wayne, if you trade the 5A cross, by the time it crossed, you were way down here. Yeah, don't. Who told you to trade on a 1 hour chart? Right, it's probably way back here somewhere. I'll never find it. It's sort of one weakness of MT4. No, that's way wrong. EFT used to be able to zoom in right on the spot. It was really cool. I gotta go find it now. Where's my spot? La 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 la. That's why I highlight it with the color little area. Where did you go? Oh wow, it's way the wrong week. Okay, there you go. Can you see it now? Where you should be short? I mean, straight up obvious, right? Just like, oh my God, in your face, boom. And the funny thing is, let me remind you some sort of factual thing. You waited days for that, weeks for that. All you had to do was say, this is my price, somewhere there, if it reverses, I want to sell. You can do that. I mean, you were sitting there like, this is going to reverse, this is going to reverse. Oh my God, this just dropped for 4 hours straight. 4 hours, 15 minutes, yeah, 4 hours. And then it drifted up for 3 hours. Oh, and then it rolled over on your 618 Fibonacci retracement. See, now I'd even zoom further than that, and I don't think MT4 is going to allow me. But once we start hitting this, and for about an hour, it starts showing signs of down, I'd be on my 5-minute chart. Okay. Because remember, this is how you trade, by the way. But you've been doing this for like a week. You've been waiting for this. Days you've been waiting for this. So, right. Let's see if it'll let me go in a little more. Another little click. A little more. One more click. Okay. So you're salivating at this point. On this 5-minute chart, where do you think you could sell? When do you think you know? The lower low. See that? You were sitting here going, it's going to get, right? Let me get my drawing tool. So you waited for days and you're like, man, if we get somewhere around here and it turns bearish, I'm going to sell it. So you could sell that. You'd have to be aggressive. But a 5-minute 5A cross, 15-minute 5A cross, I don't know. Down, 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 down for hours and hours and hours and hours. So at least you could say, look, we're lower than this. So the next high, and very often it's off this shoulder. This is why things like head and shoulders develop. Somewhere around that shoulder, and then you do Fibonacci, somewhere between the 382 and 618. But this is the same as 382. This is the same as 618. So you don't need Fibonacci. You can just use price action. It's all the same. Oh, but you could just do a 3-wave correction with Elliott wave. Yeah, it's the same, dude. What technique you use is irrelevant, okay? But you were waiting to sell all week, days while it came up. You're like, I want to sell, I want to sell, I want to sell, I want to sell at this price. And then, oh my God, lower low. Now you're looking for lower high, sweet spot, Fibonacci, roll reversal, head and shoulder. This is a crown pattern, whatever. And then to take it even further, right? Higher low, lower high, lower low. It's now technically bearish on a 5-minute chart. But see, this is where scalpers make money. But the thing is, scalpers are not paying attention to this. So a scalper makes money here, and it comes back, and they make money here, but they don't realize this is about to fall. So then, right, so now they got 2 good trades, and then they buy here and lose money, right? And then they try again, they buy here, and they lose money. And they didn't realize what they were doing was absolutely right for a little while. What I'm asking you to do is do what's been working for the last 100 days, not the last 100 minutes. You understand? You guys see that? If you don't see it, you need to do, like, I would do the entire training course again. I've actually gotten too much in. I don't mean to do training here. I'm not here to do training. I'm here to help you set up your trades. So I don't know why I got sidetracked. So I apologize. But if you're missing how to use moving averages, if you're missing how to use pivot points, if you're missing how to do multi-frame analysis, multiple time frame analysis, right? If you've forgotten price action, then you're not technically skilled. And you have to say that, like, oh man, I really got to brush up on this stuff. Because you might, here's the downside of swing trading. You can get lazy and you can just like throw down a trade, pop on a big stop, and most of the time you're going to get money. Do you understand that, guys? That's the downside to swing trading. It creates laziness and complacency. Okay? What do I mean by that? You sell, you walk away. 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 So what are you going to do this week? Oh, well, I'm just going to throw down a trade. I'm going to sell there and walk away. I'm done. I'm done for the week. I'm done. That's all you actually needed to do this whole time. Now, that's a little bit gambling. You're picking the price, but you're not timing your entries. But that's all you actually had to do to make money. Right? Over and over and over again. Over and over and over again. That's all you actually needed to do. Now, it's not good trading, but if you're not paying attention, that's the weakness to swing trading. You get lazy and complacent, and one day the market changes, but because you're lazy and complacent, you just totally ignore it. I don't know what it is. It's that slothfulness, right? So then the market reverses. You're like, yeah, well, every week I just sell it at an M3. And then the next week you sell it. And all of a sudden, like 2-3 weeks in a row, you're just throwing down trades and you have no respect for the market. And that's when you die. Not you don't die, but that's where bankruptcy lives as well. So I'm trying to teach you there's more to it than that. But you know, that's all you actually had to do. Right? You want to see something? What did you have to do on the last day of July or the last week of July? Okay. The last week of July, where's the third? Okay. Where's the Thursday front run? And by the way, we do not expect markets to rally in June and July. You know that. We've talked about 100 bajillion times, right? So we're talking about this one here. This is the week. The last week of July, it's Thursday. Where's the front run? Right here. Oops, can't even get in there now. I was going to try to place a trade, but okay. There it is, right there. You're going to sell right there. Done. That's where complacency comes from. That's it. You sold it at 72 and a half. You sold it at 72 and a half, and we're at 67. 500 pips. You didn't even have to crawl out of bed. Nothing. You didn't even do technical analysis beyond swing trading. You didn't maybe even time it. And from that, you just huge home run. But there's more to it than that, right? You should be timing things better. But you can see this into this, right? So then the next week, where's the next trade? Right? Thursday is going to be in here. Here's the next trade. Right off the monthly central. And it's just gone faster than you can imagine. Now, this was because New Zealand started cutting interest rates and stuff, but that's why there's a trend. And you got paid extra because they actually implemented it, and holy crap, down she goes. Okay? But I'm trying to prevent you from being lazy. Okay? But really, look what you had to do yesterday. Sell it next week's M3. Done. You're already in it. You sold it around 67 and a half. We're at 60. So you're up 50 pips profit. Yeah, you're thinking, yeah, this is going to make a lower low. Okay? You are out of position on a monthly basis, but it's a weekly trade. And you're like, yeah, okay, so whatever. And you're not paying enough attention. But again, the risk with swing trading, and this sounds terrible, but you make so much money so easily that you start getting lazy. And that will also lead to your downfall. You have to keep forcing yourself to be sharp, to time your entries, okay? So like, here's one. I understand I'm a bull in a bearish market. So I have to be good on my entry, and I have to be mentally prepared to not survive. I had to be smart enough to pick CAD, not Kiwi. Ronnie, you buy or sell off the 4-hour 21. Hey, my pleasure, Ronnie. You see it, guys? So what am I planning on here? What did we talk about like months ago? That somewhere around this time of the month, sometime around here, right, middle of August, I would expect, actually that's not the middle of August, right? I got to redo it. What did we talk about months and months ago? Somewhere in the middle of August, which is this, we would likely see consolidation. And if I can get macroeconomics to play nicely with my hypotheses, remember it's just a hypothesis, but if I can get macro on my side, not only will it consolidate, but it'll reverse. How many people know that? Everybody say aye. Aye. How many people know that? I love the fact that the chat isn't lagged by a minute, right? So it's just a hypothesis, guys. And I look at the macro, I'm like, yeah, I'll bet on CAD. I think CAD would benefit if macro gets on my side because they have a lot of gold and oil and timber and all that kind of stuff. Yeah, that's pretty good. But, you know, they're not slashing interest rates like Australia and New Zealand. Do you see the difference? Is Canada slashing interest rates? No. Why? Their largest trading partner by far is Canada, not China. Or sorry, is the United States, not China. Canada sells stuff to Americans. The American consumer is super happy, super rich, and is spending money as fast as they can borrow it on their credit card. I was telling you guys the other day, probably 6 or 7 or 8 months ago, I'm in a furniture store and I see two pieces of furniture. Who was it? Not Louis Vuitton. No, it's not that nice. Tommy Hilfiger. I see two Tommy Hilfiger armchairs, like nice ones for your living room. And I'm like, oh, they're nice. And they were the same, right? There were different patterns, but they were put together and they were both the same brand. I'm like, that's really nice. So anyways, I go to tell my wife, I'm like, oh, you got to see these chairs. I want to buy these chairs. They're a little expensive because they're designer, but I think they'd go really nice. We came back, sold. And I talked to the manager. I'm like, dude, really? He's like, yeah, we put them up there a half an hour ago and they sold. I'm like, I saw them 10 minutes ago. He's like, yeah. He's like, that's how it goes. We bring them out of the storage unit. We put them on the floor. And within a half an hour to an hour, they sell. And that's it. And we do this all day. He's like, we don't have any more of those and we don't expect any. And it's not like that one thing, everything. So there's the American point of view. Expensive chairs sell in 10 minutes. Designer, right? So anyway, so Canada's dealing with the consumer of the United States. New Zealand and Australia is dealing with the consumer in China. Okay? So Canada is not the same. My fundamental analysis of the economic data leading to macroeconomic outview for the entire world of trade, money crossing across borders, is Canada is not in the same shape or situation as Australia and New Zealand. So anyways, I want to go with this one first. Cool. And I probably won't make money, but I don't have risk. All part of my analysis. But what's the trade plan if you're a bull here? What do I want to do between Monday? Well, how about this? What would I want to do on Thursday? Buy here? Do I have everyone's buy-in? Are we going to move to Thursdays? Thursdays is a tough day for me, but I think we'll do it, right? Has everyone got buy-in? Can we do these meetings on Thursdays? Think about this now. I am teaching you to make trading decisions. You have 24 hours on Thursday, 24 hours on Friday, 24 hours on Saturday, 24 hours on Sunday. I'm teaching you how to plan your trades 100 hours in advance. You're welcome. Think of the audacity, guys. Think of the audacity of that. I'm teaching you how to plan your trades 100 hours in advance. This is going to change everything. This is going to change everything in your life in a positive way. You've already tested everything else. You know this is right. This changed everything for you. I hope you drink that into your soul, because as soon as you fully commit, it's going to work for you. What did I promise people today in the free the free webinar? I will help you get filthy, stinking rich in 25 years or less. But it's that attitude. Harvard said to me, we will confirm to the entire world you are smarter than they are. Let's be frank. That's what the Harvard degree says. Hi, my name's Wayne. I'm smarter. It says it's why they get hired. It's why they sit on boards. It's why they do all this crap like, hey, that guy's an a-hole, but he has a Harvard degree and he's just smarter. okay? And they said, all you have to do is pay us money 3 times a year, by the way, for 4 years. And you got to put in 100 hours a week of your time. And by the way, my time is worth a hell of a lot more than what Harvard charges. 100 hours a week. Wait, that can't be right? 40 hours a week, 40. I bet you it's not 100. Let's be more realistic. Let's say it's 40 hours a week. Okay, 40 hours a week, 160 hours a month, times 12, times 4. And I would say times 500. Hey, what's up, David? David turned his web. Yeah. Hey, David, you got your webcam on. He's like, don't click that button. Anyways, $500 an hour for 160 hours times 12 months times, for like, holy crap, right? So all I'm saying is, yeah, you put in that same time, same effort. It's not going to be as expensive as Harvard. But the thing is, it'll take the effort, and you have to have that. Like, it might not be 25 years for you. Look, maybe it only takes you 15 years. Look on the bright side. It might only take you 15 years. That's the attitude that you have to have, though. Do you understand? But you just got into your Harvard. You knew it was going to cost money. You knew it was going to take you lots of time, and you knew it was going to be hard work. If you joined this group and you didn't think those things, you're delusional. I don't think any of you are delusional. So now, I want you to fully appreciate what just happened. You're planning your trades 100 hours in advance, and the biggest risk is A, you're wrong and you lose a little bit of money or no money, and B, you get lazy and complacent. Because when the trend is working, it's so much your friend, it will fix all your mistakes. Have you ever had a house built? By the time it's done, you're walking around, there's cracks everywhere, and this, that, and the other thing. All of a sudden, the painters show up. They put caulking in all the cracks. They put mud on all the holes and all the warps, and they smooth it all out and sand it all down. Come in and spray paint everywhere, and your house looks perfect. And they fix all the carpenter's mistakes. Right? That swing trading can do that if you get lazy, but here's the thing, you get lazy trading with a trend. Okay, so this trade that I have going there, it's not a lazy trade because it's actually setting up something that hasn't happened yet. So you don't have to be that trader. Maybe in year 10 or 15, right? You don't have to be that way. On the long run, what I wish for you is that you wake up in the morning and you sell the downtrend. You wake up in the morning, you sell the downtrend. You wake up in the morning, you sell the downtrend. What are you going to do tomorrow? I was thinking about selling the downtrend. And then you look at it like, I'm not convinced it's going to be down today or this week. All right, cool, take a break. Stop making it complicated. Okay? So here, I'm making it complicated. Don't do that. I'm making it complicated because I can. Let's make it easy. Did we do Euro? Did we do any of these? I thought we skipped one. Did I skip Euro? No, I didn't, did I? Let's pick something different then. Let's do Kiwi Swissy was a great one. Now, I'll bring up Kiwi Swissy because it's interesting in the fact that it used to be something that was very good to long. Kiwi used to pay you a lot of interest, and Switzerland paid you to borrow money. Oh yeah, maybe Beast. Yeah, let's do Beast. Let's get off this one. Let's do Beast. Okay, let's simplify as much as we possibly can. Let's just get on the basic template. Do you want to be a bull or a bear? Okay. I'm assuming everybody read the book. I honestly think everyone's got it. Great. What does the book tell you? When there's a 5A cross down, ride the 5, which means this. You wake up in the morning, you sell off the 5 EMA. You sell off the 5 EMA, 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 stop. Wait for it to come back to the 21. Sell it. Sell off the 5 EMA, sell off the 5 EMA, right? Sell off the 21. You know this, you're bearish and aggressive, right? It's the whole point of my book. The whole entire book, 200 pages and 12 years of carpal tunnel syndrome to tell you that this is technically when the market turned bearish. It's not an opinion. I don't give opinions. That day, that cross, the market, not price, the market is bearish. In that case, when price is below the 21, you are bearish and aggressive. In this case, ride the 25, or sorry, ride the 5, back to the 21, sell. Back to the 21, sell. And that's going to happen forever until this starts making higher highs and higher lows. So if you followed that basic advice, you could just like sell there and be done. There, you're done since April. Good job. Now, these are daily candles. So I want you to think about these tiny little candles. Now this is like a week, so you got to be prepared for that. But what do these little candles mean? There's wicks. You see how there's a little wick below it and a little wick above? And by the way, let me know if you can't see this because I'm not used to this big new screen I have. It's ginormous. So I can see incredibly small details suddenly blown up. I'm like, I can see these wicks. So like if you're struggling through the webinar, you're like, dude, I can't see these wicks. You got to zoom in. Let me know. Okay, but what these equate to on an hourly chart is it was down, then it went up quite a bit, and then it went back down again. Okay, so on an hourly chart or 15-minute chart, that's what it looked like. But on these candles, it looks like, depends on the close, but you can see it made a lower low, then it retraced up, and then it brought down, and then it made a lower low, then it retraced up, and then it came down and made a lower low, came up. So all it did over and over and over again on smaller time frames is that, and that. So how do you trade this? This is probably London Open, this is probably London Open, this is probably London Open, this is probably Asia Fade, Asia Fade, Asia Fade, right? On top of this, they're daily trades, and on top of this, they're weekly trades, all inside of this. Okay, so you're great. So you're bear. Cool. So what do we do now? Well, you could just sell here. Let's add a tool and see if it's helpful. Let's do this one. Okay, is that helpful? These are monthly pivots. You're already bear. You're already at the 21 EMA in a downtrend. Oops, let's clear that. You're right here, guys, on a daily chart. I can't even do it. Delete. Come on, you're right here on a daily chart. What is it that you want to do over the course of the next 5 days? Based on your analysis of the daily chart. What do you want to do? That's a hypothesis. But you have a bias, and now from that you can create a trade plan. Give me 2 prices that you would consider selling over the next 7 days. Try not to make it complicated. And it's not sell the 4-hour 21 because that's for an out of position trade. We don't have an out of position trade. We have an in position trade. Give me two, guys. 30 and 30.50. I'd almost say 31, guys. I don't know where you got 30.50 from. I see 29.50 and I see 31. But oh, I see you're using weekly, I'm using monthly. Sorry. Okay. It's in here, right? Now, here's the interesting thing. As a scalper, that's what I would do. When I told you guys today I traded for like a whole year on a 1-minute chart, that's what I would do. The secret to success is bias based on analysis. And so I drop out of this daily chart and I know what to do. I'm going to sell the hell out of this. Okay? Crush it, destroy it. There is no waiver. There is no debate. There's no discussion. I'm going to find, if I'm on a 1-minute chart, I'm going to find 45 reasons today to sell. And guess what happens? I get lucky a lot, where a 25 pip trade turns into a 100 pip trade, especially if you're trading pound yen. And you're like, boom. I used to do that for boot campers. I'm like, watch, I'll scalp 100 pips. And I drop into a 1-minute chart. I pull the trigger. I'm like, ooh, look at that on a 1 minute. And then I show it on 5 minute. And I'm like, okay, great. We're going to come back the next day. Look, I'm up 100 pips. Like, how did you do that? Well, how did I do that on a 1-minute chart? How could you possibly scalp 100 pips? Yeah, I knew it was the daily 21. I knew we were on a pivot. I mean, like, I did the analysis. If you're going to do the trade, do the work, because then you get paid a lot more, right? So I'm like, yeah, man, I'm going to sell it right at 129.50. Ow. Right? And on pound yen, 100 pips is chump change. Chump change. Cool. And of course, if you're a bull, what's going to happen? You prefer this, okay? Or a slow regression like this. And I think it's less likely, but you know, stranger things happen. What it does is it turns this way and starts working its way up. And you never quite get down there. So it stabilizes around 129 and then works its way up. And it's usually slow because the rest of the world has to get on the clue train. You have to slowly force bears out and slowly attract bulls to get in and all that kind of stuff. But you have to breach the 21, okay? And you can see, like, we hit the 21 and instantly drop. You see that? Way up here. Let's delete this. You look at it. How long did it take once we hit the 21 to drop this? A day. How long did it take to when we hit the 21 to reverse this? A day. How long did it take? Well, 1 day, 2 day, 3 day, 4 day, 5 days, 6 day, 7 days, and still hasn't reversed. And it just happened to happen on the 7 days I said expect potential for reversal. Oh, well, that's an interesting coincidence. So right, this does not have to go down, but how do you want to base your trading? Okay, maybe this week's different, maybe it's not. We don't know. But how do you want to base your decision-making process? What is the logic and methodology of your decision-making process? Do you look at this chart and say buy? I would argue that nothing on this chart should tell you to buy. Nothing. And if you can get that, I think you're going to do fine. I don't want you to outsmart the market, say, oh, well, all this seasonality. And if you're like, no. Look at it. Remember we talked about common sense? Look at this. Are you a buyer or a seller? If you're a buyer, you should probably wait. If you're a seller, you should, yeah, seriously start thinking, right? Somebody sold it right there. If this drops, they're going to make the extra pips. Max, loving it. Is anyone taking notes? Is anybody learning something new? Is anyone being reinforced something that they already knew? Yeah. I've known Ron and Adam for 10 years, right? Yeah, all of that, right? Yeah, taking notes. So how do you thread this? Do you want to be a bull or a bear? Like, it really comes down. Do you want this to go up or down? What about, that was looking at monthly. What about weekly? Well, you see, you're supposed to be kind of combining them. So if you think this is going down monthly, right? There's a lot you can do. The ideal one is you should have shorted here. Okay? If you were an expert in pound yen, I want you to think about this seriously. You're an expert in pound yen. You listen to the BOE, you listen to the BOJ, you read all the reports, and you are fundamentally bearish on both the global macro economy and specifically Brexit. You know everything there is to know about it, and you know you're a bear. Not only are you a bear, you're a hardcore bear. You sold it last week, the week before, 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 and you're pretty sure you're going to sell it next week. Based on this assumption of your expertise, and you use pivots, both monthly and weekly, and price action, and everything else, is it even possible that you didn't sell this? Does that truly exist in that world that you envision? That you are the world's most, greatest expert in pound yen, and you are the biggest bear there is to live. You know exactly what you trade, and you know exactly what you want to do. And it's the psychological level, guys, of 130. Is it possible you didn't notice? Is it possible that you didn't put together a trade plan? I think it would be impossible. I think you would get that 100% of the time. And I believe you could be that bearish. I think you could. You very much dislike global macroeconomic conditions, in particular because of Brexit. Brexit is going to destroy the UK and the EU. And both those economies are supposed to be buying crap from China, but they're not. Because the British are freaking out and continental Europe is locked into poverty. Nothing they do is designed to make money. So they're not buying stuff. Germany is in the business of selling cars to rich Americans. There's a difference in economic systems. So if you were that hardcore in your process, is it possible that you missed this trade? I say impossible. What do you say? That's who I want you to become. Do you know what's more important than intelligence to society, to the people around you? and maybe even to your own psyche, more important than intelligence is certainty. People don't want to hire a smart consultant. They want to hire someone that confirms that what they're doing is not wrong. Because then they can say, I hired McKinsey, or I hired Bain, or I brought in Accenture, and they confirmed. So if this doesn't work, it's Accenture's fault. It's Bain's fault. It's McKinsey's fault. It was my fault. I brought in the experts, and they told me I was right. So it only cost me $1 million. But I know I'm certain I am right. And if I'm wrong, it's not my fault. That's what consultants do. And by the way, all those jerks go to Harvard. Because they're like, well, I brought in some guy from McKinsey with a Harvard degree, and he told me I'm right. Worth $1 million. It's the certainty that matters. I want you to tell yourself, I trade like that with certainty. I fire for effect. How about like a nervous sniper? A sniper that's not confident. Or how about a fighter pilot? I'm not feeling good about this one, Sarge. No. When you're a fighter pilot, when you're a sniper, you're perfect, and you know it. Even if it's not true, it doesn't matter. I want you to be like that. I know what I do. I'm absolutely 100% certain. I don't know if I'm going to get a setup, but if the setup shows up, I am taking the shot, right? You're like Michael Jordan. There's 1 second left. Give me the ball. I will make a three-pointer in front of 3 people guarding me, and I'm going to win the game for us. And I'm getting the championship. I'm getting the ring. I'm getting the Nike deal. Give me the ball. I will not miss. And then if you miss, they're like, oh man, I was fouled, man. That's these refs, right? It's all You got this. Give me the ball. Give me the ball. I got this. Or you're the golfer. I got this shot. I get it. Yeah, I get it. It's a little windy. I see it. The sand trap. Yeah, I get it. The water. Yeah, I see it, but I got the shot. And you say, no, Caddy, not the 7-iron, the 8-iron. You gave me the wrong one. I got this shot. It's the 8-iron. Give me the 8-iron. I know I'm going to make this. Okay? It's the one I give you as a free download, Max. All right. Have I gone too long? I don't even know how long I've been going. Let's do another one. I kind of like the Swissies, guys. Swiss franc is a great one for swing trading. Almost 2 hours? Gee whiz, you guys. I've gone too long. I'm sorry. I've been teaching too much. I'm sorry. I don't know. I'm in that mood or something. I apologize. We're not supposed to be doing that. I don't want to do USD Swiss franc. Pound Swiss. Yeah, we just did pound. All right, so let's do that. Let's clear this up. Let's go to the daily. Okay. Can you see this says up, but in here could be a down. Cool. Well, what does this mean? Well, it means we can have, let's say, a full week of down and then 3 weeks of up. Seems reasonable, right? Right? Or if you look at it like this is going to be out of position, it looks like an out of position move. So we'll hit this, and then we'll hit this, and then what? This. Okay, great. So now we just talked about the entire month of September. What is likely to happen in October? Now I'm telling you, not 100 hours in advance, like 1,000 hours in advance. Now what's the next move? Yeah. Why? Because look, there's the trend. Elliott wave person would say, oh, 3-wave correction. Great. Okay. So I don't know if this is a full bore reversal. Now it's quite a coincidence, isn't it? That it's happening the third week of August, in which we talked about here and here and here and here and here. Like you knew about this here, here, right? So it's great that it's happening right there. But it doesn't mean up forever. So I want you to tell yourself if you're a bull or a bear. And there's an interesting scenario because there's two things going on here. So shouldn't you have a plan A and plan B? What's the first one? Plan A looks like that. Okay, off the top of the regression, off the monthly M3, great. That doesn't account for a bigger correction. Let's call it correction. People come back from summer, the market's oversold, they're going to take some profit, blah, 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 blah. So plan B is it goes higher than you expect, and you're going to look to sell that as well. It's a 382, it's a roll reversal, it's a monthly counter trend, it's the long-term trend, but nonetheless, October 31st, around October 31st, there's massive depreciation of Great British Pound, and all that money leaves London and goes to Zurich into Swiss bank accounts. How many people think that one of those is likely? That's called a bias if you answer yes. So I don't know any more than you. I know nothing. Okay? I know nothing. I don't know about tomorrow. I don't know about Monday. So how do we thread this? What about next week? Well, this is a sell. Cool. What does that set up next? Let's say we do that quickly. Let's say by Wednesday or something, or Tuesday. That doesn't even matter. Let's say we just do that. Let's say it's even Friday. What happens next? We fall all week. There's a reasonable probability of that based on swing trading analysis. Well, the next move is this. It would be basically all of the week after next week. So now we're talking 2 weeks from now. Cool. And then what? You know, the thing is, we'd have to come down to the old resistance. It'll be support, and then that'll have to lower, higher, double top, and then drop. So it'll take 2 weeks to head back down. But don't be surprised if that happens. I think there's a reasonable chance, or more than reasonable chance, Brexit's not good for the pound, and that money moves to Switzerland. If that's the case, boom. And by the way, when is hard Brexit? October 31st, that is my date of birth. I got to the party and I did the Smurf. Yeah, dude, so throw that on a calendar. Where is that? So wouldn't this be great if this happens and then there's some euphoria, the Queen says something, someone else says something, there's a press release, it's not as bad, oh, there's a deal, oh, the EU and the British are going to make a deal at the last second, nice big old rally, and then they're like, no deal. But here's the thing, because you have a bias, you're either selling this or you're selling that. What if it doesn't do either of those things? What if it does this, guys? And you're a bear. Huh. Good thing you didn't lose money. Okay, you see what I mean? Why? Because you're hardcore and disciplined and you're absolutely certain. You don't swing both ways like a broken gate. You're absolutely certain. Okay? That's who you're becoming. Hardcore, disciplined, and certain in your capabilities. And we'll get there together. So thank you for being on my team, guys. This is hard work, but I think you'll do really well in 25 years or less. Hey, it's a career. You shouldn't want anything else. This is what you're going to do the rest of your life. Okay? This is what you're going to do the rest of your life. Yeah. And Joe says, yeah, or less. Good enough for me. Yeah, maybe it only takes you 15 years. But it'll be amazing 15 years. And the funny thing about trading is you won't be able to shut it off. You can be 83 years old. As long as your mind is sharp, you can do this. Right? And by then, you'll be able to trade with just your mind, right? You'll say sell, and you won't even say it, you'll think it. And you just sold. Nice. Okay? So anyways, I'm glad we can go on this journey together. It forces me to train myself and reinforce things for myself, forces me to do all the homework. It keeps me motivated. And I want you to win so much. I don't know if you fully appreciate it. Because when you get this stuff taken care of, I got some amazing things that you and I can do together. Stuff that'll just blow your mind. But I need people that I trust. I don't trust anybody. So you should step up. It gets bigger and better than you can imagine. So keep working hard. Huh? So peace on earth. May the pips be with you. May our profits be above average. I will download the video now and upload it to YouTube and put it up on the site now. So thanks, guys. Cheers.